This is the Southside School of Financial Freedom Watch List and Market Report for the week ending October 10th, 2020. Our question this week is, does the stock market further the racial wealth gap? The answer will be provided later in the video. The market does one of three things every day. It goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways. Economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week, the market was up. The Dow Jones Industrial Average increased 0.57% on Friday and was up 3.27% for the week. The S&P 500 increased 0.88% on Friday and was up 3.84% for the week. And the Nasdaq increased 1.39% on Friday and was up 4.56% for the week. Looking at the week, we can see that the market suffered only one down day, and that was Tuesday. The new unemployment claims were 840,000 versus 825,000 expected. Continuing unemployment claims were 10.98 million, a nearly 1 million decrease from the prior week. The president returned to the Oval Office after being released from Walter Reed Hospital. He then announced that he was suspending stimulus negotiations with Congress until after the elections. And in less than 24 hours, he reversed himself on the negotiation. He then joined in stimulus talks with Republican lawmakers. And there was another big bank, Citibank, was fined $400 million for long-standing deficiencies, whatever that means. New unemployment claims, the president's health, his statements, the status of stimulus bill negotiations, and corporate fines for manipulating markets are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up, down, or sideways is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up, down, with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, one of the top powers that be is Congress. Politicians will do what they must to drive the stock market up. However, sometimes they want to suppress the market. Congress is delaying a stimulus deal to hold the market at bay. A high stock market is deemed as beneficial to the president. Democrats do not want to give the president a perceived win through a high stock market. Do you own any stocks? If not, why not? Are you afraid that the stock market will fall? Are you afraid that it will lose value? Which brings us to our question of the week. Does the stock market further the racial wealth gap? Yes, it does. According to a Gallup poll as of 2017, about 60% of whites own stocks, and only about 36% of blacks own stocks. Other reports indicate that about 83% of the stock market is owned by the wealthiest 10%, and only about 1.2% of the stock market is owned by blacks. William Spriggs, a professor of economics at Howard University, recently stated, when the stock market goes up, that exacerbates wealth inequality for blacks and for Hispanics because they don't own stocks. Are you black? Are you ADOS? Are you a part of the 36% that own stocks? If you are not, why not? Is it because the stock market might fall? Is it because you do not trust Wall Street? I don't trust Wall Street either. And the stock market will fall from time to time. But do you think the rich and the powerful are going to let the market stay down? I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at southsideschoolofinancialfreedom.com. Here is my trading watch list from the week ending October 10th, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Canopy Growth Corporation, ticker symbol CGC. It's in the first column. It increased 28.61% for the week and was up 2.5% on Friday. Canopy Growth is a marijuana company. They produce medical and recreational marijuana products. Marijuana stocks, though, have plunged from their highs of more than a year ago. For example, Canopy Growth is down about 65% from its all-time high. But now it seems to be on an upswing. Will it continue its upward momentum? I don't know. I traded it this past week, and I have traded and generated cash flow from it in the past as well. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of October 10th, 2020, my portfolio is outperforming the S&P 500 index ETF SPY. Year to date, my portfolio is up 19.26% versus 13.94% for SPY, a difference of 5.32%. I am beating SPY by 5.32%. This week, equities, including puts, calls, and ETF, make up 16.09% of the portfolio. Cash is 83.01%. The cash flow generated for this week was 1.81% of the portfolio account value. The account value changed by 2.83%. Meanwhile, the S&P 500 ETF SPY changed by 3.85%. I sold option contracts on 9 positions this week. 3 calls, and 6 puts. That ranged from $102.66 to $508.65. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of Freedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.